Needham forecasts the cannabis market will grow 11% in 2023. But is that enough growth to sustain the industry as high taxes, barriers to interstate commerce, and then rising costs continue to challenge the industry? Here to discuss, we've got Poseidon Asset Management co-founder and managing partner, Emily Paxhia. Emily, great to have you here with us. Help us break this down just a little bit further here, especially given some of the barriers that the industry as a whole is continuing to run into here in the U.S.
Yep. Much for having me today. I think when you consider the cannabis of business or the business of cannabis, that barriers are just a part of doing business. We've been investing in cannabis since January 2014, and there has never been an easy time in cannabis and building these businesses because of the federal status still being a Schedule I narcotic. We have egregious tax rates that the 280E tax code applies to these businesses, giving it above a 70% effective tax rate. Not to mention the fact that we're still dealing with patchwork legislation across the country. So the regulatory framework is different in each state. So every operator has to calibrate and adjust as they go into new markets. Now, the exciting part about this is that new markets are opening. For example, at the end of December, you already saw the very first sales of adult use cannabis in New York. Last year, New Jersey opened, and that was a tremendous tailwind for the industry because we saw unlocking of a brand new market in a region where actually you don't have that much adult use cannabis. And so these things are exciting in spite of the headwinds that we've been facing the entire time of running in this industry.
Hey, Emily, it's Julie here. It's good to see you. I have to point out, weed stocks did not perform well last year. You have an ETF that tracks them. You have individual investments as well. It was a tough year from a stock perspective, anything risk related, really. And so I'm curious, given that it doesn't look like there's going to be any catalyst on the federal regulatory front, what catalysts are you looking for any kind of potential recovery here?
It's interesting. When I hear investors who are looking at the space, they are watching for catalysts. We're really focused on building businesses. So even though the stocks had a difficult year, it has been very interesting to watch how the businesses have navigated through that time. We are still seeing growth, as you pointed out, year over year in this industry. I look at Silicon Valley. They've now started to talk about things such as free cash flow, EBITDA. These have been things that we've been focused on in this industry for as long as I can remember, because we have never known where the next flow of capital would come from. And yes, the catalysts are important because that's what opens up the access for other investors to come in. It's what drives the desire to come into this sector. But in the interim, while we're watching for catalysts to come, we're really just focused on building businesses. And I think that when investors have an opportunity to really pay attention to this sector, they'll see very attractive businesses and really a new consumer product segment emerging in the United States. You can see that there's been a decline in consumption of alcohol around especially the millennials and Gen Z. Cannabis is there to pick up the torch and run with it. And I think that's a really exciting potential kind of consumer product shift that we're seeing. So in terms of catalysts, though, there are things on the horizon. The president, spoke up and he said that he was going to look at rescheduling or descheduling cannabis. He also said in the same breath that it should not be at the same level as fentanyl. So if it goes below the schedule or in a better schedule than fentanyl, and I, by the way, wholeheartedly agree with him, we should see massive benefits to the industry. That would unlock the 280E issue that I was just talking about earlier with the taxes. Further, it would give us much more opportunity. They passed the research bill, so we can continue to research the health and wellness benefits around cannabis. So those are just some of the catalysts. Safe banking was the thing that did not get introduced this year. It should have been introduced. It was a failure on the part of the Democrat Party, and the Republicans holding it at bay as well. So it should have been passed. It has overwhelming support in the United States from a constituent level. But if that gets introduced again, there could be a good chance for it, but we're not holding our breath. We're focused on other paths to work through this and continue to grow this industry.
Emily, we were just showing some of the stock prices and some of the established players, and the declines have been stunning. We're essentially here talking about penny stocks of companies that were significantly higher about a year and a half ago. Do some of these big companies need to merge just to serve as a clearing event for other companies to emerge and maybe fetch some higher valuations?
So I see that you're showing the Canadian tickers right now, like Canopy, Aurora, Kronos. Those are not the companies that I'm talking about. I am talking about the health of the U.S. companies. I'm talking about GTI, TerraSend, Curaleaf, Trulieve. I'm talking about Ascend Wellness Holdings. I'm talking about companies that I think are contributing in terms of building businesses and focus on the bottom line. These companies have the ability to raise money once the industry starts to get the attention of the institutional investor community. And I think that that's really where we're focusing. In terms of the Canadian operators, they've had a bit of a different experience because early on in the Canadian markets, they had a real flow of capital into those businesses. And I think they just weren't focused as much on the fundamentals of the business. They were focused on growth at all costs. And frankly, there was a lot of overbuilding. And you know, in the United States, we had the opportunity to learn from that. And if you look at the US operators, the CapEx spend is substantially behind them. So now they're really going to be leveraging the assets that they have across the different verticals and across the states that are unlocking.
Emily, it's great to see you. By the way, we have a front row seat to the New York rollout. The new shop is right around the corner from our office. Emily Paxhia, Poseidon Asset Management co-founder and managing partner. Good to see you. Thank you.
Great to see you.